Hello everybody, Sadie Girl and I are sitting here just talking about Robinhood, and I'm sporting my Robinhood green. Today Robinhood was flying off the shelves and we took full advantage of it, and I am in my new trader network today calling plays on Robinhood, and it was so much fun to see everyone's excitement. I love seeing the trading floor through the eyes of a new trader. It's so much fun helping them understand the market and how it runs and looking at how to get in and out of plays. And so if you have not joined us for the challenge, we just started it this week. So if you want to get in on all the fun, you may want to consider, and there's a direct link below that will allow you to go ahead and join us in the challenge. Now, for those of you that are interested in Robinhood and you feel like you missed the boat, I have great news for you. I have done a lot of research for you, and I have looked at other companies that have been included in the S&P and watched their movement up into the inclusion date. Now, the inclusion date is going to be before the market open on September the 22nd, but there is a lot of trading between now and then. And now that I have a better understanding of where the price movement may be, I have some incredible trade setups that I wanted to share with you. So I hope you find this helpful. If you're interested in Robinhood, this is going to give you a way to capitalize on all the excitement. And by the way, IV is really high right now because of the excitement. So typically I wouldn't look at selling puts unless a stock is down, but when the excitement is this high and I have researched a potential floor for the stock over the next several weeks, that gives me more confidence, and sometimes I just go ahead and jump right on in. Let's go into the computer and let me share with you all the information that I learned and some potential trade setups that will help you grow your wealth. Let's talk through the dynamics of what might happen with Robinhood over the coming weeks now that we have the news of the inclusion. Well, if you look at announcement day gains, since 2021, 74% of new S&P 500 additions have outperformed on announcement day, averaging about a 4% gain. It's much higher than prior years. Now, pre-inclusion run-up, historically, stocks show a run-up in the weeks leading up to inclusion. Goldman Sachs notes a 12 percentage points of outperformance in the 3 months before announcements. And we don't have that much time. We only have a few more weeks. So post-inclusion reality, it's not always smooth sailing. Many new entrants see gains reverse within a month post-inclusion. So keeping that in mind, let's look at the potential price targets. And I actually think these are conservative. But having this information is so helpful if we're going to try to craft trades around this. So the hypothetical progression over the next 4 Fridays, looking at September the 12th, we're looking at a midweek estimate of about 108. Now, we've blown through that today. We are seeing it above 117 today. So if it settles in at 108, I think that would be a great opportunity to put on some of these other trades for the coming weeks. Looking at September the 19th, we're looking at a midweek estimate of about 112. The range could be 108 to 115. I do think that that could definitely be stretched with the amount of excitement that we are seeing. Then the inclusion happens on the 22nd. We could see a mild pullback after that. Looking at September the 26th, this is the reaction. It's the first expiration date after the inclusion, and they're estimating it to be around 108, any range from 105 to 110. And then when we look at October 3rd, just 1 week later, post-inclusion normalization, the IB might start to die down at this time as well. So anywhere between 102 and 108. But the main thing that stands out to me when I am looking at all of this is it doesn't look like we're going below 100. And if we do, it should not be for long. So all of the trades that I will put together will keep that major fact in mind as I look to capitalize on this event and the elevated IB as a result of the announcement. Next, I want to take a look at a few important factors so that you have a better understanding of what type of company you may be investing in. The PE ratio is a little high at 59, but there's so much on the horizon that doesn't intimidate me at all. Now, when I look at the analysis tab for Robinhood, I see what I like to see. I see here we have a lot of green for earnings, and then of course they're expected to beat earnings when we get closer to their earnings at Q3 2025. That's October 29th. And then look at the revenue and then look at the earnings. They're doing a great job. The average price target is only 113, but I don't think this has been reevaluated after this news. So we should see this go up. It's so interesting with price targets. They're always after the fact. I would really like an analyst to tell me before the fact, but it doesn't look like that's going to happen. It is rated a strong buy, and this was all done, like I said, prior to this news of S&P inclusion. Now, this is what I find very exciting. So, we're on the 3-month chart for Robinhood. And although we are at the top of the band and looks like we might be stretching it in the coming days, the RSI still has room to run. We're only 64 on the RSI. And as most of you know from watching this channel, it's not considered oversold until you're above 70. And it can stay elevated for quite some time, especially if the excitement is there. Another thing I wanted to show you is this volume bar. You see there was heavy buying pressure today. So this is where everyone starts to try to establish their positions and so that they're prepared for the inclusion, because the inclusion puts a lot of buying pressure on a stock. And it's great because it's over time and it starts to stabilize a stock's movement. Because once you have 401ks and institutions starting to buy this regularly, it really provides a great base and it's less volatile moving forward, which is good because predictability is great, especially on a popular stock that you want to own. Now, if you're looking at important moving averages, it's a little difficult to see, but right here at 103, that's that 50-day moving average. And the bottom of the band is right here under 100 at 97. So this is further evidence that looking at something around the $100 mark or even slightly below would be a really reasonable opportunity to sell puts or do credit spreads. The next level down after these levels around 100 would be around that $82 mark. This is the 100-day moving average. And then if things got really ugly and we have another Armageddon type situation in the stock market, then you could see it drop as low as around the mid 60s. I don't expect anything like that. I think the buyers would definitely step in on this one. This has quite the following. So when I have price predictions that are pretty well laid out for a stock like this, I like to stagger my entries. And so I plan to sell puts or do put credit spreads over the coming Fridays. So let's look at the first potential entry. If we're looking at this upcoming Friday at 9/12, then the excitement's still high and we still have another week to go of potential excitement. So knowing that, I am going to go down right here to this 110 level. This has a 0.17 delta. And I will probably not execute this trade unless I see a red moment and it will bring my return up significantly, because right now it's only around 72 cents. But check out the 110 sold put. Currently, you'll be getting $72 for it, and it does expire in a few days. If you happen to be put the shares, then I think that would be fine if we look forward to next week and we look at continued momentum up. Now, when we go to 9/19, this is the last expiration date before inclusion. So this is when excitement will be at its height. So let's look at something maybe a little bit more aggressive. If you look right here at this 113 level, we have a pretty good delta, 0.3. Right now, if you were to sell this, you would be getting $318 for this trade. And that's actually really good, because if you consider the return on this, you'll be getting $318. You're going to be putting up $11,300. That gives you a 2.8% return in a little bit over a week. So that's a strong annualized return if you annualize this number. And I think if you're looking at longer term, it would not be bad to hold on to this stock if you were put the shares. Now let's look at post-inclusion. That would be on the 26th. That's when you see a little bit of the excitement die out, a little bit of the IV die down. But I'm going to go ahead and place this trade before the excitement dies down so that I can take advantage of it. So let's look right here at 110. This is offering $3.20 a share, so that insulates me a little if we do pull back. And then let's look at my deltas. My delta's respectable right here at 0.28. Also, there's a good bit of open interest on this one and volume. So I really like the 110 strike looking at the first week post-inclusion. And then just for fun, I'm going to leapfrog over all these other expiration dates, and I am going to go to December. I love doing this. It will more than likely be caught up in the Christmas rally, so we can take a little bit more aggressive trades if we want to do more contracts. So for this one, I am actually going to go right here to 105. If we don't think we'll be going below 100, if I were put the shares at 105, look, I'm getting $915 for this trade. So this actually puts it below 100 if you account for the amount that I am getting right here on the trade itself. So I really like this trade. I might do more than one contract on this one. This is the 105 strike, December the 19th, and you're currently getting about $9.15 a share. While we're on this tab, I'm going to go ahead and build a credit spread. I do like going out to December because it gives time for the trade to work out. So if we truly believe we're not going to spend any amount of time under 100, and I wouldn't mind starting this trade a little aggressively right here at 95. This would be the opening part of my trade, and this is the sold put portion. Now I'm going to go down to 85. This is going to be a $10 wide strike, and this will require $1,000 to put this trade on. So I'll be selling the 95 put, I'll be paid $570 for it, and then I will be buying the protective put of 85, and that will cost me $345. Let's send it to a ticket. Depending on your budget, you can adjust these numbers right here to fit your budget. If I were to put this on, I probably am going to do 5 of them. So that would require about $5,000 in capital. The credit looks like it's going to be around $235 as we currently sit. Now, if Robinhood pulls back, this will increase. But if I preview it, you can see right here, I'll be getting $1,175. And then the reason it doesn't say $5,000 is it is accounting for the fact that I am receiving this credit. So it's reducing my potential risk. And I really like this trade setup. And then what will more than likely happen if we continue to see Robinhood stabilize at this higher level, then this will rapidly start to decay this price right here. And that's actually good for me. So I might decide to get out of this trade when this $235 has been cut in half, and it only would require about $1.15, $1.20 to buy it back and exit the trade. Now, if everything goes against me, then this $235, if it potentially doubles, and then we're looking at something closer to about $5, then that would be 100% loss for me. And so I would probably exit if I saw that something that I was paid $235 then balloons to something closer to $5. That would be my warning sign that something could be drastically wrong, and I might decide to exit at that point. Okay, I hope you are ready for the trading week and you have some wonderful trades to start off the week with. I'll be talking to you throughout the week. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to see a video I did on Robinhood on how to score free leaps, yes, Robinhood was trading a lot lower back then, but you can still get some really good deals. I'm going to leave that video for you. I'm going to leave it for you right here.